Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. This is a year-to-date chart of the S&P 500 in the red and green bars and the NASDAQ in the blue line. And since the beginning of the year, we had a triple top in NASDAQ, up about 10%. And then we broke out above that level, and the S&P actually peaked at 22% over where we started the year. It's now declined, and it's up 14.5% for the year. We're about 10% or 4.5% more than the triple top that we saw. There have been three pullbacks during this last run from June till October. The first one, the support was found at 36% of the bullish percents. The second one, the support was at 37. The third time, it was at 37. It was holding pretty strong. Last Friday, it dropped below that to 35, and on Monday, October 4th, the bullish percent was 33%. This market is clearly starting its 4 o'clock loop. There are three major influences on the movement of stock price, according to a study by Ben E. King. 80% of your investment success will be due to the movement of the sector and the market. Now you can view a weekly snapshot image of the market and the sectors. This is a snapshot from April 9th, 2021. The red arrow, pointing towards the 2 o'clock position, represents the market. The rectangles each represent a mini-sector. They are color-coded to the sector they represent. Healthcare mini-sectors are in red. Technology is dark blue. Financials are green. Media communications are brown. Industrials are purple. Consumer discretionary are light blue. And all the others are gray. I've been charting this movement since 1998 over more than 25 cycles using this exact mix of 40 mini-sectors. The key to understanding the movement and what makes the cycle predictable are the psychological stages that investors experience as they go through complete market cycles. It rarely changes. These stages are on the outside border of the circle. The placement of the sectors and the market are completely data-driven. The interpretation of what to expect next is from my experience of going through the cycle dozens of times. I'm not always perfect, but the beauty of the circle is that it corrects me quickly when I don't get my prediction absolutely correct. I've learned it's okay to be wrong now and then, but absolutely abysmal to stay wrong when the data says otherwise. This week, the movement in the sectors were decidedly mixed, mainly on the downside. First, in the health sector, biomedical declined, healthcare declined, drugs were unchanged. In media communications, internet stocks declined, media declined, and telephones declined. In technology, semiconductors declined, software declined and crossed to the bear side, electronics declined, and computers declined. In the consumer discretionary stocks, gaming declined, leisure was unchanged, restaurants were unchanged, retail declined, household products declined, and autos were unchanged. In financials, Wall Street declined, real estate declined, banks rose and crossed to the bull side, savings and loans rose and crossed to the bull side. Insurance advanced, and finance declined. In the industrials, aero defense rose, building products declined and crossed to the bear side, waste advanced, chemicals declined, Metals were unchanged. Steel declined, and machinery tools declined. In the others group, forest products were unchanged. Protection and safety was unchanged. Textiles declined. Precious metals rose in a flight to safety. Electric utilities declined. Food declined. Transports rose. Oil services advanced. Gas utilities declined. Business products declined. And oil advanced. This week, 7 mini-sectors remained unchanged. 9 advanced and 24 mini-sectors declined. 2 sectors, software and building products, crossed from the bull side to the bear side. 2 sectors, banks and savings and loans, crossed from the bear side to the bull side. We now have 11 sectors on the bull side and 29 on the bear side. Overall, the market score fell from 42 to 35, and as of Monday, October 4th, 33%. Display the SPiDeR circles and how the progression has gone on for the last several weeks, and you can see how the sectors are starting to consolidate in the 4 o'clock area. For the week ending October 1st, the Dow Jones Industrial Average was down 471 points, or just over 1.5%. The S&P 500 was down nearly 100, or losing 2.21%. And NASDAQ lost 481 points, or 3.2%. Last week, there were 2,915 stocks on buy signals. This week, 2,766. Net, we lost 149 to sell signals. Last week, there were 3,449 stocks on sell signals. This week, 3,617, a net gain of 168. There were 19 new stock issues. Overall, the market score last week was 42, this week 35.